Hello, everyone. Looks like Jody's just working on switching people from attendees to panelists, and we should get started here pretty soon. Thanks for your patience.
Hello, everyone. It looks like we are all present if we're ready to get started. Can everyone hear me okay?
Yep.
Okay, good deal.
John, I miss your glacier background. I always felt like I was in the mountains. You're muted.
Still.
That's probably how it should remain.
Ready when you are, Jody.
We're ready.
Thanks for joining us, everybody. This is Joe Easton, and I will call the March 9th, 2021 meeting of the Missoula Parking Commission to order. Thanks for joining our meeting being held via Zoom webinar. When I call for public comment, please use the raise or lower hand feature to let me know you wish to be recognized. Jody will allow you to talk, and you'll need to unmute your mic. If you have joined us by phone today, you can raise and lower your hand by pressing *9 and mute and unmute using *6. If you are participating by phone, I'll call on you by reading the last 4 digits of your phone number. Jody, would you call for attendance, please?
Yes. Glenda Bradshaw.
Here.
Pat Corick.
Here.
John Romer.
Here.
J.R. Casillas.
Present.
Tiffany Brander.
Present.
Joe Easton.
Present.
That's all of the board.
And I recognize the others in our group today, so we will get to those when we get to our spots on the agenda. Jody, any public comments, or Tiffany, any announcements before we move on?
No, sir.
Tiffany? No, sir. Most of what I will cover will be in my director's report. Thank you.
Board, any adjustments to the agenda? I'll move on to number 5, approval of our January 12th, 2021 minutes.
Well, Mr. Chairman, I've read the minutes. I take no exception to them and would move to approve.
Motion is in order. Do I have a second?
I've read them as well and would second the motion.
Motion and a second. Any discussion from other board members? I keep forgetting it's only been 8 months, but we need to roll call vote to approve this. Go ahead, Jody.
Linda Bradshaw, how do you vote?
I vote to affirmatively.
John Romer, how do you vote?
Yes.
J.R. Casillas, how do you vote?
Yes.
Pat Corrick, how do you vote?
Yes.
And Joe Easton, how do you vote?
Yes. Let's move on to our audit review. Number 6, communications and presentations. Grace and Jan, thanks for being here, and I'll turn it over to you.
Great, thank you so much. It's a pleasure to be with you folks here today virtually. I recognize a lot of familiar faces. I'm going to go ahead and share with you our presentation here. In addition to the presentation itself, you folks should have a complete copy of the financial statements as well as our communications to governance. I am going to provide a brief overview of the financial statements, which at this point is probably very long overdue as far as history-wise for you folks. You're probably well moved on to FY 2021 at this point, so we'll keep it pretty brief. And then Jan will cover some of our required communications. So looking at the financial statements, just big picture wise, going back through them, as you folks know, COVID-19 had a significant impact on the Parking Commission in the fourth quarter of 2020. However, at the end of the year, the Parking Commission was in a pretty strong financial position, and I'll cover that in a little bit more detail further on here. First thing I'd like to note is unmodified audit opinion on your financial statements. This is the best opinion you can receive. Basically notes that the financial statements are free from, we believe that the financial statements are reasonably stated and free from material misstatement, whether due to fraud or error. Before we jump into the other highlights, the one thing that I did want to point out is we did have a prior period restatement of about $32,000. This was specifically related to some of the T2 systems costs. With a lot of the technology that the Parking Commission has implemented over the last several years, there's significant multi-year warranties and other service contracts that cover different periods. So when you receive the bill for those, it might be paying 12 months in advance or 8 months in advance. And so we had some small adjustments to get those expenses into the right period. That misstatement or that prior period restatement was not material for the purposes of our audit, but the management team in consultation with the city did want to make sure that we get that reported in the correct year. Current assets actually increased by about 44,000 as of year end when compared to the prior year end. Capital assets decreased by 563,000. This is primarily due to just the passage of time and some of those significant improvements over the past several years being depreciated. Other assets decreased by about $158,000. Deferred outflows decreased by $36,000. The deferred outflows and deferred inflows are primarily related to both the other post-employment benefit liability and the pension liability that the Missoula Parking Commission holds. This is kind of the pro rata share of the city's liability. And this is something that kind of fluctuates each year. The actuarial estimates are determined in a year in arrears. So those deferred inflows and outflows do their best to account for that activity. Current liabilities decreased by $94,000. It's primarily timing differences and when bills were getting paid. That being said, as you'll see kind of down below here, the Parking Commission did take pretty quick action to reduce their expenditures when the COVID-19 pandemic hit last year. And so there was kind of an overall decrease in expenses as well. Long-term liabilities decreased by about $741,000. This was specifically related to bond and lease payments being made timely. Deferred inflows increased by $44,000. And overall, the net position increased by $77,000. The net position increase is simply the result of revenues being in excess of expenses. Overall, revenues decreased by $3.4 million. That being said, in the prior year, some of you may recall, there was a significant unusual transaction. About $3.2 million of that revenue was specifically related to the contribution from MRA related to the Rome parking facility. So about operating revenues decreased less than $200,000, which in the scheme of some of the obstacles that you folks were dealing with last year wasn't too bad. Prior to that, as you know, the Parking Commission was doing record numbers for FY20 revenue prior to the pandemic. So as I noted, expenses in total decreased by about $15,000 as part of kind of a concentrated effort to control costs as a result of the pandemic. This next slide kind of looks at what I just spoke about in a pictorial way. We typically like to look at the last 4 years and look for any trends. As you can see, there were some pretty significant capital additions in 2019, some of those T2 systems implementations, and then this year just a small decrease. Again, really just the result of passage of time. Current assets and other assets, deferred outflows of resources have remained relatively stable. Net position is moving in the direction that you'd like to see it. It's growing each year. Obviously, that big jump in 2019 was specifically related to that $2.3 million contribution for the Rome parking garage. That's that big jump here. But other than that, it is moving, trending upwards, which is what you'd like to see. Current liabilities, again, relatively stable. Long-term liabilities have been decreasing the last 3 years as a result of regular bond payments and regular lease payments on some of those significant equipment purchases, and deferred outflows of resources have remained relatively stable. Revenue by source, again, just looking at this pictorially over the last 4 years. As you can see here, both ticket revenue and parking revenue is down this year. From the previous year, it had been growing every year. Both ticket revenue and parking revenue had been growing every year since 2017. Investment earnings were pretty consistent aside from 2018. And again, the significant capital contribution from MRA for the Rome parking garage in 2019 here stands out. This chart looks at your revenue sources as a percent of total revenue. Parking revenues are your primary source of revenues, making up about 86.3% of total revenues in 2020. Pretty consistent with 2018 and 2017, 19. Again, a bit of an anomaly due to the significant capital contribution related to the Rome parking structure. Looking at expenses by source, this year you can see personnel is down a bit. City of Missoula contract just up just a bit, pretty flat there. Depreciation very significant this year. Repairs and maintenance and supplies down a bit, and other operating expense up a bit, bond interest pretty consistent. Nothing too notable on this slide. In general, expenses have been pretty consistent, which is honestly something to celebrate, since, you know, prior to the pandemic, the commission had consistently seen revenue growth without a corresponding significant increase in expense, and in some years a decrease in expense, especially when compared to that revenue growth. This next slide looks at, again, your financial health. Again, the Parking Commission was actually in a very strong cash position at the end of the year here, with about, you know, roughly 196 days of cash on hand. We take the commission's total expenses and we divide that by 365 days to get an average daily expenditure number, and then we take your total cash and cash equivalents to come up with roughly how many days of cash you have on hand. If everything was to dry up today, you weren't able to collect any parking revenues or any ticket revenues, how many days could you operate on the cash that you just have on hand there? So some growth in that number actually from 2019, and in a relatively strong position at year end. The next slide, again, is a measure of your financial health, just looking at your working capital ratio, taking the total current assets divided by the current liabilities. And again, the Parking Commission in a very strong position. Really, you know, anything over 1 here is pretty strong, but you have, you know, over 2 times as many current assets as you do current liabilities, 2.35 times. And it's actually the highest that this ratio has been in the last 4 years. Again, this is just a snapshot in time, right at that June 30th, 2020. But given some of the challenges of 2020, the commission ended in a pretty strong position. And with that, I'll open it up kind of quickly to questions on the financial statements, and then I'll turn it over to Jan to cover some of our required communications. Any questions specifically on the financial statements?
Anyone? Thanks, Grace.
Okay.
Go ahead, Jen.
Can I just cut in for 1 second? I just wanted
Sure.
to point out for those T2 warranties that Grace was mentioning that were sort of all over the place due to our varying acquisitions throughout the years. We have now officially hit a point where they should all line up for our next round of payments. So all of the warranties, from whether it is a meter or the LPR and gating equipment, we finally got it. So that is not something that should occur next year. And hopefully will be less of a headache for finance and the audit team and JCCS. But I did want to just clarify that very quickly.
Thanks.
Great. Well, thank you. Hopefully everybody can hear me okay. I'm on my iPad. My computer doesn't like to work with Zoom sometimes. So
Yep, good.
At any rate, you get to see the backsplash of my office. So as Grace alluded to, we are required to communicate certain items to those charged with governance, which is this committee. And we typically do that at the end of our audit through the issuance of a letter that's based on basically boilerplate language, if you will, that's required under our auditing standards. But some of the significant items in that letter include, what we do as part of our audit responsibilities. We also talk about any new accounting standards that may be issued or adopted through the year that's under audit. And this year, knock on wood, there were no new accounting standards. Grace will be talking about some of them that have been delayed just due to COVID. But so we kind of had a reprieve this year on the accounting standard changes, but that'll change in the near future. We also talk about and call out significant estimates that we want to make sure that those of you who are looking at the financial statements or the readers of the financial statements understand that we look at in relation to the underlying estimates that are used. So Grace had talked about, the deferred inflows and outflows due to OPEB and the pension liability that's on the books. Those are based on actuarial estimates that are significant. So we rely on those estimates They're, again, a year in arrears. So we look at a bunch of different components to make sure that we're looking at the balances that are reported to make sure that they're in accordance with GAAP in all material respects based on what we look at. And that's called out in the letter. Depreciation expense is also another one. It's just based on estimated useful lives of each asset that's on the depreciation schedule. Outside of the prior period adjustment that Grace talked about, which she indicated was not material, we had no other audit adjustments as a result of our audit procedures that we need to bring to your attention. There were no disagreements with management, no difficulties in performing the audit, and all communications that we do throughout our procedures are basically just part of the whole audit process. So with that, that's basically what we're required to communicate to you. And I'll turn it over to Grace to go over the upcoming standards.
Thanks, Jan. And before I do that, I do want to note, and some of you have been part of this committee in the past, where we have had some internal control communications. This year, we did not have any internal control communications, no internal control matters, no reportable internal control matters. And so really just wanted to point that out. Tiffany and Jody and the folks at JCCS and Lee and Jesse and the folks at the city have really worked hard to shore up your accounting policies and procedures to ensure that we didn't have any internal control issues. So just because we weren't talking about it this year, since we didn't have any formal issues, I wanted to ensure that part wasn't missed, because no news is good news in this specific instance. But again, huge kudos to Tiffany and her team and Lee and her team, and of course all the folks at JCCS as well for kind of working through some of those items we had noted in previous audits. Also, that being said, I did want to mention a huge thank you to, again, the same group of folks. This year we did do our audit 100% remotely just due to the pandemic and the nature of our business. Typically, what Jan and I do is we're going out week after week and spending time in different locations all over the state, a week with the parking commission, a couple weeks with the city, and folks really all over the state. And so just by the nature of our business, we weren't able to be on site with our clients this year, which did create some additional work for our clients. And we are, just really, really thankful for Tiffany and Jody for making that super seamless, and Lee and Jesse and Brenda and her team too. Just everyone was extremely responsive, very, very timely, provided us with everything we asked for and more. And so really appreciate everyone's efforts to make things run as smoothly as possible given the circumstances in this complicated year. With that, I just want to briefly touch on some upcoming standards that were delayed, again, due to the pandemic. Is kind of the theme of our talk today, surrounds all things that we do, it seems. But one of the first standards I want to talk about is actually a group of standards, and it's actually auditing standards. Statements on auditing standards numbers 134 through 140 were delayed. And substantially, these standards together make some pretty significant changes to the report that we issue. So on page 1 and page 2 of our financial statement packet, our report is going to look differently. Most notably, the layout. I know in previous exit conferences, when we're physically there with you, I tell everyone to, turn that very first page and go to the top of the second page because that's where the opinion is. That's going to change. Now that opinion is going to be very first thing on page 1. So when we meet, that's where I'm going to kind of be directing your attention. Also, the disclosure of key audit matters. This is going to be a decision that your board actually has to make. Under these new standards, we can be engaged to report on key audit matters. Key audit matters are those that require a little bit of judgment or are subjective in nature. Particularly for your organization, it would be things like the OPEB liability, the pension liability, those things that are pretty significant estimates and aren't really black and white, require a lot of judgment. Those items can now be addressed in the report if the board, in fact, engages our team to report on those. It also expanded the letter to include the entity's ability to continue as a going concern, specifically in the responsibilities of management section. That's always been a responsibility of management, but now that's going to be specifically disclosed in the report in the management section. And the last thing is really just some additional language changes or enhancements to the responsibilities of both management and auditors. There's actually not significant changes or really any changes in our responsibilities. It's just adding some items to the report to highlight those to the readers so they understand our role and management's role in the audit. And then the last thing that I want to talk about is GASB 87. This has to do with leases. This is important for both lessees and lessors. The Parking Commission acts as a lessee and a lessor. And substantially what GASB 87 does is require leases to be carried on the statement of net position, or in the for-profit world, the balance sheet. And so you're going to be seeing, this isn't effective now due to the pandemic. It was delayed until FY 2022 will be the first year that it's effective, but it does require a little bit of work for implementation. So over the next kind of 18 months, we encourage the management team to kind of start looking at this and making some of those changes. But essentially, you're going to see lease liabilities, lease assets presented on the balance sheet with corresponding assets or liabilities depending on the lessor or lessee, which way you're looking at it. Again, the Parking Commission has both. And so we'll be working closely with the team at the city and Tiffany and her team to make sure that this significant change gets reported appropriately by fiscal year 2022. And with that, we'll open it up for any other questions, comments that you folks might have.
Grace, thank you for that. Jen, thank you. I have a couple of questions and one that just came to me from the last thing that you said. With the change of recording the leases to the balance sheet, I'm assuming it's a current asset. And then I'm assuming that they'll be, depending on what time of year or if it's a long-term lease, will change the length of its liability, will identify its liability. So my assumption is that having those on our balance sheets will change our working capital ratio, which also influences our bonding capacity. So what's your expectation about that? I mean, it's big number.
Correct. So depending on, again, the lease specifically, you hit the nail right on the head. It will be presented as current or long-term, and those portions will be determined again on the terms of the lease. But it will absolutely have a significant impact, potentially, on your debt covenants and your various ratios. Some of your leases are already carried on the balance sheet. For example, almost all of the T2 systems equipment leases are already carried on the balance sheet. But so I think the biggest change will be potentially in your favor, carrying some of those long-term individual leases on parking spaces on the balance sheet, depending on the term. Anything less than a year, you aren't required to carry on the balance sheet. So there are some policy elections that can be made to simplify that accounting. But in general, just thinking really quickly off the top of my head, I think if anything, the reporting may enhance your balance sheet position just due to the fact that most of your leases that would be significant liabilities are already being carried as liabilities, all of the T2 systems equipment. that I can think of. Tiffany, any other significant leases?
No, and I feel like when we've talked about it, when it was prior supposed to happen, we weren't super concerned other than the administrative work of making those transfers. But luckily we do have all of our leases in T2, and it makes it a lot easier to make those transitions on our side of things. So it'll be some administrative work, but as far as like a financial concern, we're not too concerned about it, just actually getting it done and reporting situation, but it shouldn't be too difficult.
Okay. Yes, John. Unmute, John.
Got it. So yeah, it's a little bit concerning. Has there been any modeling, Grace or Jan, to this point with maybe taking our current circumstance and then superimposing the leases in this to see just what it does with that coverage ratio? Or I'm assuming somebody's done some modeling on that, but maybe not.
I think, like as Tiffany noted, we looked at this, I don't know, 2 years ago, a year and a half ago or so, and I don't think it had a significant impact. It's going to be more of an administrative burden, unless, of course, the Parking Commission does engage in some significant lease terms moving forward. For example, if a private entity was to build a structure and they were to lease, long-term over a 10-year period, lease a floor of that parking or 2 floors of that parking, those type of things can have a significant impact on your balance sheet moving forward. But as of what we know today and what we knew a year or a year and a half ago when we looked at it, I don't believe it'll have a very significant impact at this current date and time. But certainly could, depending on what endeavors you did moving forward.
Gotcha. And just to follow in with that, so the leases that we do for parking, as long as those leases are on a basis of 1 year increments, we would not have to account for those, correct?
It's a little bit tricky. The idea is if it's a lease less than 1 year, but if it's likely that lease will be renewed or has been renewed year after year after year for several years, then unfortunately it has to be accounted for as a lease term more than a year. So it requires a bit of judgment, and that's where Tiffany alluded to the administrative burden. The good news is all of those leases are already in a central compository, which is kind of our first recommended step to folks who are getting organized for this is, hey, get an idea of what all your leases are and what all the terms are. And then we're going to have to do analysis to kind of determine what the true terms are. But unfortunately, just saying, or just if you decided, a lot of entities are like, okay, well, we'll just make sure all our leases are 1 year and then we'll just renew them annually. Unfortunately, that doesn't get you out of the reporting burden in this case.
Okay, and darn, thanks.
Right. Then my next question is, Jan, and about our pension liabilities. And again, just trying to prepare for or be aware of worst case scenario. I have no experience with this, but because it's so far in arrears, it's 1 year in arrears, what's the variance going forward year to year? And what do you expect our worst case scenario might be? I wouldn't hold it to you, but coming out of a pandemic year and trying to look at ongoing liabilities, and we get information that's already a year old?
Yeah, for sure. And Grace can speak to more of this as well, but that variance each year will depend on what's at the state level, because it's actually not the OPEB liability, but the pension liability is at the state level. And so your proportionate share, which is also part of the city's proportionate share, so we kind of do a calculation based on that. It'll vary each year depending on what that state level is, but we've typically seen it go up each year, maybe except for one over the last several years that it's been in place. So it's really hard to say, but that actuarial, the arrears part is just the actuarial report date is a year old, basically. It's based on year-old data. And that's just basically how they have to calculate that estimate. But you can probably count on it at least being the same or increasing, just in general.
And one of the
Thanks.
things that impacts it pretty significantly is the markets, obviously. And so this coming year, the markets had, I think, pretty much recovered as of June 30th, 2020. So that portion of it, shouldn't change too much. You shouldn't have too much of a change due to underperforming investments. But where you're going to see the increase that Jan's talking about that you're seeing year over year is just due to another year's passage of time and your employees working another year. And so, you're paying in to fund future employees' pensions. And unfortunately, that difference continues to grow. The state has worked on trying to close that gap each year since this has been measured. I think they've increased the employee or employer percentages each year that they have to contribute, but unfortunately there's still a gap. So that's where the main increase really is coming from. And I think I would be shocked to see a decrease. Even if the markets performed very, very well one year, I would be very surprised to ever see a decrease unless you're significantly cutting the number of employees that you have contributing to those plans. And we have seen with some governments a shift of employees moving away from the pension plans into the defined contribution as opposed to the defined benefit. This is specifically for the defined benefit plan. So if that's something that continues and folks do make that election, you might see it decrease in future years as well. But currently, I'd say the majority of folks are electing into that defined benefit plan, and the state is still having a little bit of a difficult time covering the costs associated with those plans.
So an elephant out there, but not a big elephant.
Yeah, and another thing where you might actually see a decrease moving forward is one of the main actuarial inputs has to do with life expectancies. And I did hear last year the life expectancy did go down by an entire year, roughly just due to the pandemic. And so, that could, for not fiscal year 2021, but 2022, you might see that impact as well, because they do use that input. There's several different inputs that go into this calculation. It's quite complicated. It's really not just investment earnings, it's future investment earnings, life expectancies, future contribution rates. There's a lot of moving targets, and all of those estimates are disclosed in our 6 or 7 pages worth of footnotes that are a little bit painful, but sometimes helpful. So I think you should always expect an increase. How much of an increase, that's a bit of a question mark.
Got it. Board, any follow-up questions? And I'd also like to give Lee an opportunity to comment.
I'm not sure if you're asking me to comment on the audit or the pension specifically. I just wanted to reiterate what Grace said, and that it was actually very, I don't want to say seamless, but very smooth audit process this year. I have to thank Tiffany and her staff, and Brenda, of course, and Grace and Jan for doing all of this remotely and so well. Everybody really pulled together and communicated quite well. One of the better audit seasons I've ever experienced. Thank you.
Thank you, Lee. Other board members, questions or comments about the audit? Tiffany, anything to wrap up? Okay. Thank you both very much. We've all been through difficult audits, and so it's been great to get through. Of course, we're very interested in what's next year's look like. Let's keep talking about money and go to our financial statements.
Thank you guys. Have a great day.
Hi, Grace.
All right, so I'm assuming that everybody got a copy of the December financials with the dashboard.
Yes, Brenda.
So I'll just go through. Oh, go ahead, Tiffany.
Yeah, I wanted to quickly just apologize for sending those so late. I was hoping that we were going to be able to go over January as well, but completely on our staff and myself, we were not able to review January in enough time for Brenda to be able to compile everything. And obviously this year, this time, most importantly, is getting those financials to you as quickly as possible. They were included in our projections that we'll go over, but I did want to just apologize for that oversight, and you will get those shortly. Thank you, Brenda.
Yeah, you're welcome. And to piggyback on that, we do have January input. We just had a couple questions that we got answered yesterday. So those financials will get prepared this week. And then hopefully over to Tiffany in a week, and she can send them out. So everybody's on top of that as well. Just a few notes that I wanted to go over. We did get everything adjusted to the audit. And so those entries have been made. We have trued up the cash balance with the city. And then we have also gone through and trued up the year-to-date revenue and expenses for the first 6 months of the fiscal year. There's just a few changes that occur after we get our reports. So we like to do that usually quarterly to true that up. Nothing significant to note. Most of it was just reclassing things between different accounts. The one bigger adjustment on the audit side, we do recognize the merchant fee expense based on an estimate every month. And then during that audit process, that gets trued up. And the merchant fees came in last fiscal year at $91,500, and we had accrued $132,000. So we did recognize a savings of about $40,000 based on our estimate there. And then when we were doing January, we did come across some changes on the December balance for the cash that have happened recently. And part of that was with those audit entries that got made there. So they did move $194,000 from the main unrestricted account that has been since moved to a restricted cash account for the maintenance. And so that's not reflected in our December financials, but you'll see that come through on January. And then they have also captured the accrued city contract. So you'll see a decrease on the cash balance for about $112,000 for the 6 months of the city contract there. The other big movement there on the cash balance for December is the loans at First Security. We had the payment come through in December there. So you'll notice that the cash is down for the month. Last month, the available cash, which you'll see on page 3 of just over $1 million last month, is now at $921. The majority of that is the loan payments being made. No other significant changes there on the balance sheet to note. In December, the lease parking was up. You guys do capture quite a bit of your annual leases in December. And so for the month of December, that was $185,000. Year to date, revenue is down as we anticipated from prior year of about $480,000. On the flip side, expenses are also down about $370,000 from last year. And then when we compare it to budget, we do come in closer to budget on the revenue side. We're within $80,000 there. And then expenses are actually $195,000 down from budget as well. So for December, we did have a net income of $86,000. which brought our year-to-date into the positive of 62,000. So we're ahead of our year-to-date budget by about 140. Of course, we're down from prior year, which last year we were at 415. So, any questions that anybody had when they were looking at December?
Nope, I think you can go on.
All right. Well, we'll get January out to you guys shortly. And if any questions come up when you get those, just let us know.
Thanks, and thank you for your help, and welcome to the team. I appreciated Jim
Yeah,
sending
you're
out
welcome.
your bios to us.
Oh, good. Great.
Before we move on, any other questions from the board or for Tiffany about our financials? Okay. Thanks again, Brenda. Let's move on to number 8, Director's Report.
But before we do that, I would like to hit section B for the updated projections discussion.
Sorry.
If that would be
Yes.
okay.
Yep.
Great.
Sorry. Go ahead.
And I'll go ahead and take the lead on that with Lee available for any questions. Give me just one second here. All right. You should see a budget projections sheet. Does everyone see that? Yes. Okay. Great.
Tiffany, could you make it just a little bit bigger?
Absolutely.
Is there a way to make it larger?
Absolutely. Yeah. So you tell me when, because I've got both screens going here, so it's a little bit harder. How's that?
That's good. That's
Awesome.
much better.
Okay, great. So as I mentioned, we did use our updated numbers through January 31st. So just sort of to keep that in mind. So as promised per every month, since the pandemic started, we've continually worked with city finance. And so we worked with the city to update our projections as of January 31st. As with prior projections, our methodology remained the same. We used based on averages throughout the year. And then we again tried to be conservative with our projections. If there wasn't enough information to show within our expenses, we utilized the budgeted number. And then it is important to note, as Brenda pointed out in our December financials, that all of our large annual expenses, so debt service, city admin fee, those did come out in December. And I don't know why. We know they're coming every year, but until I see them come out, I'm always like nervous about it. So those are, they have come out, they are included in these projections. So as you'll note, on the spreadsheet here, we are at 89.89% of budget of our revenues, and expenses are at 72.93% of budget as of the end of January. So this gives us a debt coverage ratio of 2.13, which is a slight improvement from our previous projection, which I believe was like 2.9. So we're, as a reminder, our required ratio is a minimum of 1.25. So again, that makes me feel very good. We're on track. We're doing okay as far as our debt coverage goes. So the majority of our projection savings is really from those continued salary savings, and it's just making up a large portion of our overall savings. Per usual, we are keeping our expenses as low as possible, as Brenda also mentioned. So we continue to do that while also trying to expand our revenue wherever possible. I do want to quickly note that we have seen our meter revenue start to increase from those winter numbers. It started late January, early February. We're seeing increases, and I checked yesterday, and only 8 days into March, we're already pretty darn close to $30,000 in meter revenue, which is essentially half of what we've normally been seeing since COVID. So I think that once we get through March into spring and early summer, it's anecdotal, of course, but I strongly feel that our meter revenue will continue to increase. And as tourism picks up, will undoubtedly have a positive effect on our revenue and therefore our bond coverage. So we can go over any questions that you may have. Obviously, at our next meeting, we'll go into a more detailed budget projection sheet, similar to what we did last year for our budget, for your review, and we'll kind of dive deeper. But just as promised, I wanted to get this projection to you and just sort of have a general overview that we're still on track and doing well.
Thanks again. Any questions for Tiffany? Okay, anything more, Brenda or Lee? All right, now we can go on to director's report.
All right, give me just 1 second. I'm gonna switch up my screens a little bit. Okay. All right, so I have quite a few things to go over on our director's report. I wanted to start with some staffing things. As far as our recruitments that we've sort of been going back and forth on and then had to hold because of COVID, I am happy to report that Jody has diligently once again been working on our open admin 2 position, with interviews yesterday, with HR moving forward with reference checks. So we're hoping to have an offer of employment and an anticipated start date, I'd say by the end of the week, maybe next week. So once that admin 2 has been hired and is on staff and trained, we'll move forward with our parking enforcement officer, with the hope of a new enforcement officer on board early summer. We definitely want to have a full enforcement team for this summer. So, but we need Jody. And if she's training our admin person, she won't be able to do the enforcement officer. And we also want to make sure that that admin person is very comfortable in their position before Jody has to step over and train the enforcement officer. So that is where we're at on that. And I also, at this point, just wanted to take the opportunity to inform all of you board members and Brenda and Lee as well, that I have given Joe and city administration notice of my resignation. My family has decided to relocate back to our hometown in Arizona, with an anticipated final day of May 6th. Obviously, I love the parking commission, and I feel like we've come very far over the last 5 years, and we've done a lot of really great things. So in no way do I intend to close the door on my last day and walk away. I'll be working closely with the HR department, city administration, our staff, and Joe to just ensure a smooth transition. And I'll make myself available for that person in person while I am still in Missoula. And when I've made my way over to Arizona, I will still be available over the phone, email, texting for quite some time. So I will definitely in no means just run away and be gone. So the city has hired a, well, we'll be working with the city HR department the week of the 15th. And I will be working with the HR director, Joe, again, city administration, to start looking into that recruitment process as soon as possible. And we'll be sure to update you as soon as we kind of have more of an outline set for that, and obviously a more detailed update at our April meeting. So that's that update. And another sad transition for us is a board member update. After a very long time as on the MPC board, and mostly as our chairman and leader and wonderful background Zoomer, John Romer's last meeting will be coming up here shortly. I suspect April, with next month's meeting being his last, as his term does end in May. At yesterday's council meeting, Mayor Ingen did refer an appointment to the Public Works Committee. And so if that is confirmed, we should expect to welcome a new board member at our April meeting. And so with the end of John Romer's term, you folks will need to vote on your next co-chair for the MPC board, either in the April agenda or the May agenda. So if anyone is interested, start thinking about that, and I'm sure Joe will take it from there. But John, I feel okay about leaving at the same time as you. You've offered me so much guidance over the years, and I can't say what a wonderful asset you have been to me and to the commission. So thank you. And we'll talk more, not on Zoom, so I don't cry. Moving.
Let's do coffee.
Okay. So moving on to a question that was brought up at our prior board meeting. Glenda, you had asked for an updated credit card processing fee per transaction cost. And I know Brenda touched on that during the merchant service fees during her presentation, but I wanted to let you know that I did speak with City Finance, and our FY20 transaction fee was at 24 cents per transaction. And our FY21 fee from July to January so far is at 29 cents per transaction. And so it's just important to note that our transaction fees are not really just dependent on the volume of the transaction, but on the dollar amount of each transaction. And because we're parking, we have just a lot of very small credit card transactions. Passport helps with that because they are the merchant of record, so we don't absorb that fee. So if folks are paying with credit card on Passport, it doesn't really affect us, but it is those small meter transactions that sort of drive that number up. I will say that the 24 cents in FY20 was great and likely contributed significantly to that savings amount. But the 29 cents that we're at right now is very close to where we've historically been. So there's really no concern there. We've been at 30 or 29 or 31 cents per transaction, basically since 2015. So I just wanted to give you that update there. And then one last update is on the long range transportation plan that we've sort of talked about in the past, also known as Missoula Connect. It's a project of the MPO with the city, and the MPO is very near their final long range transportation plan draft, and it should be released in May. So I just wanted to take the opportunity to encourage all of you to participate in one or two of their 2 upcoming Zoom meetings for a discussion of the included projects and programs in their recommended scenario. Because it's for the city as a whole, it's not just downtown related, but there are quite a few projects just spread throughout that I think would be very interesting for all of you to take part in. Those meetings are coming up on Wednesday, the 24th at 6 p.m. and Thursday, the 25th at noon. And I would be happy to send you the link for registration, but it's also very easy to just Google the Missoula MPO's website and then click on their participate link. As we move forward in our agenda, you'll see that we have one action item on the agenda, and that is Missoula in Motion's submittal of their annual CMAQ funding request for $8,000, just as in prior years. And then lastly, our April meeting updates is just really one thing outside of having a new board member join us, but that will be a grant funding request from the Montana International Choral Festival. They'll be asking for a grant to go towards their downtown shuttle service, similar to what we did in 2019 for their 2022 festival, which is scheduled for July 13th to 16th. And we'll have a presentation along with an action item for that request. And that is my director's report.
Okay, so there's a lot to unpack here. Not the least of which is credit card fees. So who wants to talk about credit card fees first? I suggest to the board that we talk about the next 60 days and the director position in, for a little bit, depending on how our time goes, in old business. I can speak a little bit to the mayor's nomination of the next board member, and perhaps others of you know Peter. So does anybody have any questions for Tiffany about anything besides her going to Arizona? Okay. Thanks, I guess, Tiffany. We have one action item today, 9A, Missoula in Motion funding match request for $8,000. This has been a standard request of this board for many, many years. Tiffany, who is presenting the request?
I certainly can. You all received the letter that they send. Staff recommendation per usual is that we that you consider approving their request. It is an easy combination of all of the things that we should love in parking and TDM. Missoula in Motion, specifically in the downtown area, has helped immensely over the years in helping employers find alternative transportation methods for their employees. For folks that are moving into the area, they have wonderful pamphlets that they hand out and help folks understand the transportation options in the city other than single occupancy vehicles. As you all know, our mission is to support parking, but also transportation alternatives. And this is one very easy and very effective way that we can do so. So again, per usual, staff recommendation is to approve the request. And I will hand it back to you, Joe.
Thank you. Any questions or discussion on a potential motion? Motion, perhaps?
Oh, I guess my mute's off. Yeah, I move that we approve the Missoula in Motion grant of $8,000.
Thank you.
Second that.
Second.
I would.
Any questions or comments about the motion? Okay, Jody, can we have a roll call vote?
Yes. Glenda Bradshaw, how do you vote?
4.
John Romer, how do you vote?
Yes.
Pat Corick, how do you vote?
Yes.
J.R. Casillas, how do you vote?
Yes.
And Joe Easton, how do you vote?
Yes, motion passes. Thank you, board. Tiffany, our next is a non-action item. You wanted to go over the annual lease rate review.
I would. I also did just want to ask Sarah if you wanted to double check with Jody on any public comment on any of our action items.
Did we have anybody out there, Jody, before we so brazenly move forward?
We have not had anyone call in, no.
Okay, thank you for reminding me, Tiffany. Go ahead.
Thank you. All right. Okay, you should now be seeing a rate review spreadsheet. No, you shouldn't. Okay, now you should. How's that? Do I need to make it bigger, Jody?
If you make it bigger, we probably can't see all of the numbers and you would have to do some scrolling, but the print is pretty tiny.
Okay. We'll go right there and I can try and scroll as I go.
I think it's good enough. Thank you.
Thank you. All right. So I think because we had such a short meeting in January, it's payback. So I apologize. This is going to be a bit of information. Please feel free to interrupt me as we move forward. But As per our annual rate review policy that you were so kind to approve last year, it is time for us to discuss a rate review with any board action expected to occur at our upcoming April meeting. So we'll just sort of briefly go over things today, and staff will send notice to our leaseholders informing that a further discussion and action or possible action will be held regarding the possibility of lease increases at our April meeting. But this is just sort of to shortly summarize where we're at. So as part of this review, we'll briefly discuss current leases and permit fees. I'll also go over occupancy in areas reflective of our existing conditions. Obviously, due to COVID, utilization of our existing parking supply and market demand is pretty difficult to ascertain and will likely remain so through at least the next year to 18 months. So for a brief overview again, we have a snapshot of our surface lease lots. We have on-street lease spaces in our garages, and hourly parking in our garages. And I'm on the wrong tab here. Okay, so as you can see from our comparison timeline here, per our policy, we go from November to January. So from November of 2019 to January of 2020, and November of 2020 to January of 2021 is our comparison. Utilization in basically all of our areas has decreased by approximately an average of about 50%. Even with our actual lease numbers staying approximately the same. So, I mean, that shows us that we definitely have the ability for temporary leases, and over leases is fully achievable. The caveat is that we have to have parkers in need of spaces. So we'll go over that here in a little bit, but we can dive deeper into this if you'd like, but essentially occupancy is very low. And the snapshot that we did is where we have garage transient. That's just our hourly, the number of vehicles that have parked hourly in those structures, not leases. On this one, I can make it much bigger. How's that? Okay, I saw you squinting there, John. I'm sorry. So in our lease lot areas, whether they're lot or on street, we have Park Place. Central Park is broken into the floors, so 1, 2, and 3. We have our Rome, West Alder Street, and North Woody Street, which are just a general good example of our street leases. Woody Lot, Greyhound Lot, Midtown Lot, and then Riverside Lot. I do think it's important to note that Riverside Lot may be a little bit skewed due to the construction and the reduced number of available spaces, but essentially it's about 50% down. And just to also point out that these are just a snapshot in time. So it's not all day, every day. It's just the days that the officers were able to drive through in their scooters and get utilization data. So we're not saying that there are it was only occupied 24% of the time, all the time, just at the moments that the officers drove through. Okay, so outside of that actual utilization, we'll move deeper into our leases, which regardless of whether folks are parking there or just simply holding on to their lease spaces while they're figuring out what they're doing in this COVID life, these are just lease spaces that are actually being paid for and continue to be paid for. So to briefly summarize this spreadsheet, you can see here down at the bottom, we manage approximately 1,298 lease spaces with rates that range from $35 a month for on-street lease areas up to $85 a month in our garages and covered structures. And so while we're at about 96% capacity with oversell in a few areas, this is the first time in a long time where not only do we have available spaces in some areas, but we have no waiting list. So in those areas, I went ahead and highlighted them in green. So there are these green areas here, which account for about 64 spaces. And 11 of those are between Park Place and the Rome Garage, with the significant majority of being in the west front lot riverfront triangle area. Historically, that has been the hardest area to lease for us. And as people as businesses moved out of the downtown, we just sort of lost leases in those areas. They were the most significantly hit, and we don't have a waiting list in those areas. So those are in the green areas. While our administrative team does continue to diligently make those waitlist calls, as we touched on at our last meeting, there's just a lot of back and forth involved, and it's not a task that can be completed quickly. I mean, for just as an example, there are 2 spaces available in our, well, I guess Bridge Lot is a bad example because it's under construction, but there are 4 spaces available on our Clay Street street lease area, and there's 36 people on that waiting list. But for every few calls that they make, they then have to wait a few days for people to call back, and then there's messages back and forth. And I will forever, always, even from Arizona, be incredibly thankful for our administrative team for making thousands of waitlist calls, and just repeatedly having to make messages. It has been a moment. So that's sort of the snapshot on our utilization and lease areas. I'm happy to answer questions now before we move on to other rates. If there's any questions about utilization or lease areas.
Tiffany, what was the national standard that we learned, or I learned, when we were in the downtown master planning process? What's the rule of thumb percentage of occupancy? Is not the right word, but it's use. I know you're using occupancy here, but percentage of people are
oversell?
No, of people who have leases and use them.
Have leases and use them.
Isn't that, I'm understanding utilization is that metric?
I'm not quite sure I fully understand your statement. I'm sorry.
Okay, I'll start over. Please define utilization.
Utilization is the number of vehicles that were in the structure that have a lease space that were parked in their spaces at the time our LPR vehicles went through, or at the time for our lease spaces that the gates saw that transaction.
Will you click on that page, Pat? So 15% on the days between November 1st, 2020 and January 31st, 2021, 15% of the existing leaseholders had their cars physically in the parking lot.
Correct.
And what was the national standard? I remember some.
I mean, the goal is 85%.
Right.
Is that what, but I'm not sure if that's what you're asking. I'm sorry.
Yeah, the goal was 85, but it was much, much less than that was the actual utilization. So I guess where I'm going with this is, yes, pandemic reasons, but we continue to have very low utilization. Even though it was either last year or a year before that, we decided to add leases to oversell. And we also made decisions about what parking lots to oversell capacity. If everybody who had a lease showed up one day, we wouldn't have enough spots for them for some of those lots.
Correct.
So I guess going forward for next month's discussion, I would like to know that if you could go back through your notes and find out what our goals were or standards were for other parking commissions about utilization. Is what's the biggest number there? 32%? Or let's go with non-pandemic, 67% on the North Woody Street. Is that should that be 85% or is that at a standard? So I'd like to know that because that'll figure into my next question is on rates. And I can't remember if I think we had this information the last time we discussed rate increases. If you could add a column for board information, when the last time we raised rate for each lot. We didn't raise all of the lots last time. Most of them we did, but so I just want to confirm that maybe there's some lots that we haven't raised in many years and some lots we raised just last year.
Yes, and that is actually a portion that I will cover in our fees, but I can also add it to the spreadsheet for next week as well. I just made myself a note. So
yeah.
If there's no other questions on this portion, I will go ahead and just move on to our fees. Okay. Okay, so we have not technically increased any of our lease rates since 2018 when we increased our parking lot lease spaces by either $5 or $10 a month based on their location. So those were just parking lots. So not street, not structure, and not garage. So an example of a parking lot would be our Woody Street lot, which is right behind City Hall, in between City Hall and the transfer station. So those were done in 2018. And obviously, as you all know, in March of 2020, lease increases were approved and were meant to be implemented in July of 2020, but were indefinitely suspended due to COVID. So for our April meeting, I will again just go ahead and present those same increase numbers, as I feel they remain fair, comparable to other smaller cities, and still fall below the Missoula private market rate. However, I will say at this time, and probably likely at the April meeting as well, unless there's some sort of drastic change, I don't know that I would recommend any lease increases with the start of the fiscal year in July, which is typical. But I would instead recommend an additional rate review in December with any approved increases beginning in January of 22. I think that will provide you with an overall snapshot of a full year of COVID and what's happening not only to our parking structure, or I'm sorry, just our overall parking and our parkers, but also obviously our community as a whole, as that was a large portion of your decision to indefinitely suspend the 2020 increases. So I'll make sure all of that information is on the spreadsheet for you to discuss in April. If we look here on our permit rates, you'll see on our spreadsheet here that all of our permit fees were increased last year, except for our loading zones, which were increased of July of 2018. So we have not seen any significant decline in the amount of, permits that are being sold. And these numbers just generally stay static throughout the years, regardless. So we can certainly entertain further increases to our permit fees. However, we did just do those, and I will leave that up to board discussion in our April meeting. But that is your general overview of our rates for this meeting. Questions? Yes, John Romer. But you're muted.
Muted.
Can we open that spreadsheet again?
Absolutely.
The rate sheet, please.
How's that?
Okay, so my comment was, I'm one of these guys that if there's a column and it hasn't been added, it bugs me. But the number on the waiting list is significant.
Yes.
When I look at the number on the waiting list as a ratio of the actual spaces available, to lease, it's a significant ratio. And I just wanted to call attention to that. It's not like there aren't people who want to park. It's just that they don't want to park over in Park Place. It's not convenient. So they come and they park in Central Park, right? Or they go someplace more convenient because they can. They got a lease permit. Am I missing that?
No, that's very accurate, and I think you can see the popularity of each space based on, I'm sorry, of each area based on the number of folks on the waiting list. As I previously mentioned, our Broadway, West Front, Riverfront Triangle area has historically been our least desirable area. There's just something about having to cross Orange Street that folks do not want to do. And those make up the majority of our 0 people on the waiting list. Whereas our Bank Street structure or Central Park have a very long waiting list that, I mean, Jody, you can correct me if I'm wrong, but I think the Central Park waiting list goes back to the mid 90s. I mean, there's very little turnover in those spaces and the waiting lists are very small.
Thanks. I would love to add that column.
Okay.
Anyway, thank you.
Any other questions or comments or information that you'd like to see for next month? Okay. Tiffany, anything to wrap up?
No, sir.
Okay. So I'll move on to old business and start off with this. Tiffany called me last week about this time to go over our agenda like we usually do. And then she told me her news. And it was my opinion at the time that even though we're all friends and work well together, that she share her news with you in a public forum rather than one-on-one. She obviously treated it well by reaching out to me in my role as chair. So if you are disappointed or upset with Tiffany that you're learning today that she's given her notice, that rests with me and not with Tiffany. Going forward, I think the board has, well, a couple of things to consider, and I'll be working with Tiffany and I'll welcome anybody that would like to participate. First of all, 60 days is a quick turnaround for any of our positions, let alone executive director. So we'll be meeting with HR, as she said, and the mayor's office to talk about how we best put a search in place, how we move through that, what it might look like. And obviously, from my perspective, I guess not obviously, is what happens if May 7th comes and goes and we don't have a selected candidate yet, which is real life, happens all the time. I'm interested in board comment and participation on that. And it doesn't have to be today, but maybe a note to me, or you could wait and bring it forward in another meeting. Any changes in corporate structure, job responsibility, job description. We just wrote this job description in the transition between Rod and Tiffany. We conducted a small search and decided that Tiffany was our best solution. So another discussion or something to consider is scope of the search, timing of the search, other priorities that you as board members might want to make sure that mayor's office, HR, and your board chair consider. Because I think there's lots of directions, lots of things that we need to make sure of, because obviously change of director, coming out of a pandemic, acceleration of our return to revenue, change of our longest term board member. So, it'll be a couple of changes at once. So we just want to make sure that I understand your concerns and diligence on how to go forward over the next 60, 75, 90 days. Pat, I'm going to pick on you. Would you share your comments or your initial thoughts on what I just said?
Yeah, I think one of the questions we need to address, Joe, is, has there been movement in the city's salary structure? Because if we want to cast a wide net, hopefully that number has moved up. Because when we've gone through this drill before, a lot of people who may be interested, when they look at the cost of living in Missoula, et cetera, I just think it becomes a challenge, particularly when you have a number 2 or number 3 person at a parking commission outside of the state looking to come into Missoula, and they start crunching the numbers and looking at housing costs and one thing and another. So hopefully there's some movement there to attract a larger candidate group. That's one issue. And I certainly agree that, Tiffany's going to be difficult to replace given her enthusiasm and I guess passion for parking. And so, it's going to be, we'll get a search out quickly. Hopefully there's, some additional compensation that the city would allow given the position and see what kind of candidates we can cull through and then get on a short list.
I'd love to chime in.
Go ahead, John.
Yeah. So Pat, I absolutely agree that it's frustrating to know that we're not able to go out, and if we have to go outside the Missoula market and actually compete. And I have not heard anything, and I hope that we can hear something that would give us confidence that could change, at least from the city view. It seemed like hands were pretty tied. So anyway, I'm going to miss Tiffany. That's a big surprise, kiddo.
I know.
I'm happy for you. Thanks.
Thank you, sir.
So I'll make sure to not speak for Tiffany, but I did ask her, and again, forgive me to put you on your spot, but I did ask her if her decision was related to any change or dysfunction or role or future or anything to do within our commission's responsibility. And because that was important for all of us to know, obviously, if she was accelerating a decision based on something that we as a board or as a city could be doing differently. And so, again, forgive me, Tiffany, but she told me that it wasn't. And so I trust her in that. But if there is information or things that she would like to change or do differently or wish had gone differently, then I hope, Tiffany, you share that with us so that we can prepare for the next director that way.
Absolutely. I'm more than happy to discuss all of the things that went into this decision outside of this meeting on a one-on-one basis. But I have been incredibly fortunate to be in this position, and it's a really hard decision. I have enjoyed my time with the city as a whole over the last almost 10 years, and with the parking commission for the last 5 immensely. I feel like I was given the opportunity to grow and really improve our department, and I think that my team and I have done that, and this is just a really difficult decision. So I would be happy to again chat offline with everyone about that. But yeah, this is a wonderful position, and I am really excited for the next chapter for the Parking Commission, and I'm confident that we will find someone great to jump right in and get a lot of things done. And as I said earlier, I'm definitely not going well, I am going somewhere, but not for the most part. I'm here and I'm happy to help in the transition. So I will continue to make sure. Thanks for making me cry, Joe.
JR, Glenda, what are your thoughts over the next 60 to 75 days?
Yeah, I concur with that. Obviously, I'm a little newer to the party, but I was around for the last exercise and recall that being a big issue. Maybe time will be on our side here with COVID and, the influx of people, maybe we'll get lucky that somebody was already heading this way that is qualified and not so concerned about the money. Maybe that's just wishful thinking, but I guess we'll see what happens. But there's certainly been an influx of, a lot of out of state. I just in the last several months, I've met lots of different professional people, like in the legal world, for example, that are looking for jobs and, willing to take those at really reduced rates just because they were going to be here anyway. So I don't know, maybe we'll get kind of a new batch of qualified candidates. We'll see. And Tiffany, I wish you the best. And it's been great. You've made life easier on me getting my feet wet and getting acclimated on the board. So I appreciate everything you've done and wish you the best down south. I'm heading there this week, actually.
Thank you.
Glenda?
I'll just echo everybody's comments, Tiffany. I've only been on the board a few months, but just your knowledge and your financial acumen, your planning skills and response during the pandemic have been outstanding. So you will certainly be missed. I think for me, because I wasn't here last time, the conversation around recruiting and attracting a candidate and the possibility of seeing if we can't get an improved wage, I think is helpful. I'm not entirely sure sort of what I'd like to hear from Tiffany, if not today, another time, maybe what she thinks the most important skills are for the job. I think it's interesting. You may want to be recruiting for somebody who has straight sort of parking experience. But from my view and watching and listening, it seems like financial acumen, planning, managing large assets, networking are all as important, if not more important than literal previous experience in parking. I may be wrong about that. And then I don't know at the city level how interim plans are built, but if there's a thought, if it did go beyond May 7th, and it sounds like it might, what the plan would be to keep the Parks and Commission going after you leave, Tiffany. Those are my thoughts.
Thanks.
Yeah, I don't, there has been in the past, and there will continue to be very solid transition plans, likely with an interim director if we're unable to hire someone. I definitely have some thoughts on that matter that I've shared with city administration and would go into further detail on that later. But I in no way intend on stepping back until I know that we are ready for it. So I think that, we'll make sure there's a solid transition plan, at least with an interim, if not with someone. So it's obviously it's a concern at any point such as this, but we'll take care of it. We'll take care of it. I just, yeah. So I think that we'll definitely get a great person on board, and if not, we have we'll make sure that we have a strong plan for who we're the type of person that we're looking for, the skill sets that are imperative in this position. And if there is one thing that I have learned is that my ability to not be afraid to ask questions has been incredibly helpful. And between the various assets that we have at the city, from the finance department to JCCS to the to the parking commission team, who had who we couldn't do it without them, right? So obviously the director position is important, but the relationships that we have with other city departments and our parking commission team, particularly our parking services manager, I'm confident that then the next director will come in with a team that is ready to jump in and assist them and get them up to speed as soon as possible. So I think that we'll get there, and I don't have too many concerns on that front.
Can I add something?
Yes.
I just want to thank your administrative team, Tiffany, and I'm very well aware of the support you've gotten. I know there's a person on your staff who could be an adept leader if that was what that person wanted to do. And I can't believe that you were able to do this with the small staff that you had. It shows it shows a lot of character, and I sure appreciate it. And all of your staff. It's been wonderful to watch. Thank you.
The parking commission team is an incredible team, and we are, myself and I hope all of you included, are very thankful for the team that we have, from our enforcement officers and maintenance team who are out in the elements with people who are generally angry, and then add COVID on top of it, to at times hostile environment, and come to work every day and continue to support our operation. To our administrative team, particularly Jody, who keeps everything together. You could not ask for a better right-hand human than Jody Pilgrim. And our administrative team is, you know, the parking commission as a whole is a small department, but we are a mighty department and we get things done. And that is something that I'm very proud of, and I'm sure will continue into the future.
So on that, Jody, as we go forward over the next 60, 75 days, I'm interested in your input, and I'm sure other board members are as well. So don't hesitate to reach out to any of us. Please email or phone call about your priorities or goals or concerns about Tiffany's last days and or the transition or new initiatives or whatever. So door is open.
Thank you.
Tiffany, your comment reminds me of the Shakespeare quote. Though she is but little, she is fierce. And so that I think says a lot about the parking commission and the group you all have.
I agree, 100%. Our staff is amazing, and their ability to accept change and just go forth with a plan and get things done has made my position a successful one, and the parking commission as a whole. We continue to keep chugging along, and it's because of our staff.
So changing subjects slightly, as Tiffany said, this is likely John Romer's last meeting. And John, have you been on the parking commission 25 years, 28 years? Still muted. Still muted. Still muted. So I think your retirement gift, we're going to contribute to our Zoom lessons.
Hey, Joe, can you hear me now?
Yes, John.
Thanks. I don't know. The button wouldn't work.
Mm-hmm.
I started with this commission in the mid '90s. I was on the committee that worked to hire Ann Guest, and I wasn't a member of the parking commission at that time, but I'd been on the Downtown Association board for nearly 17 years. And so I recognized there was a need to have somebody from the downtown and the retail community on that board. And I still feel that's important. So I hope that as our new board member is looked at, that we may be getting somebody that has some sentiments and heart in the downtown. Otherwise, it's been very rewarding for me. And I guess this is my last meeting. Is that right, Joe?
Probably.
Okay. But I want to thank all of you for allowing me to work with you. It's been a pleasure. It's been a learning experience for me. I can put professional parking on my resume now, and it's right alongside with able to erect a 60 by 120 circus tent. And I can do that too.
Mm-hmm.
And I got all that experience by being involved with my friends in downtown. So thanks.
I'm grateful for your service and for your leadership and perspective. And I know that the way that you handled your wish to reduce your commitment to the parking commission as well as give notice was a great help, because we've all had experience on this board and others where we just wake up one day and we're missing a parking commission member. So thanks for working with me to transition into your role, and then enough notice so that we can identify somebody. And so I know Peter, the mayor's nominee. He is in front of Public Works this Wednesday. He actually approached me several months ago because he was looking for a way to participate in public boards or other committees. And so I was just telling him about the stuff that I'm involved in, and this seemed to catch his interest. So he is an engineer and a planner and works for DG&A, and so I'll let him introduce himself next month. But I think he a new and different perspective for the seat.
Wonderful. Good luck to you all.
Thanks a lot, John.
Likewise. Thanks, John.
Any other comments or questions for the good of the order? Lee, even though you got your camera off, do you, there you are. Do you have anything you'd like to add?
Well, I will say, John, I know that you have been an enormous contributor to the Parking Commission board. So I'm happy for you and sad to see you go. And my heart breaks a little bit to see Tiffany go. I think she stepped into this role and as a wicked smart, ambitious woman who really did great things with the Parking Commission. I think we were very, very lucky to have her, and her shoes are going to be incredibly hard to fill.
I concur.
Will be
Yeah, I concur, and thanks for saying that. Anybody else want to make Tiffany cry before we hang up?
I think we're good, Joe. I think we're, had I done this last year, it wouldn't be on a live YouTube Zoom video.
Right.
It would just
Now
be
it is written in ink on the internet. It is
Great.
now forever.
Any
Anybody that
future
wants to
employers,
search Tiffany crying on Google will be able to
everyone
find
will know that Tiffany is a parking nerd who loves the parking commission and made a really tough decision. And you'll note Jody's face isn't on here because she's probably
she's
crying
bawling
too.
somewhere.
Jody. Anyway, thank you all very, very much. We're almost at 2:00. So
Yeah.
Joe, I'll leave it up to you, sir.
Thank you. Our next meeting, I think, is April 8th or April 8th or 6th.
6th.
Jody. Okay, it says April 8th on the agenda,
6th.
but it should be the 6th.
Yep.
That was my mistake. I apologize. It is
So-
April 6th.
Double check our Outlook, because I don't do anything if it's not on Outlook, so double check. Any other comments or questions? I will close the meeting at 1:41. Thank you.